The US bank Wells Fargo has dismissed a number of employees for faking computer activity to appear productive when working from home, when they were in fact just moving their mouse around. My name is Jack Reeves and welcome to this week's episode of Tax Tidbits, where some workers have been accused of mouse jiggling while working remotely. It's unclear how the Wells Fargo discovered the fake activity, but it does coincide with new US regulations that requires brokers that work from home to be inspected every 3 years. They have confirmed that this is the reason for some of their recent terminations. Working from home has increased in popularity due to the pandemic, though many firms are now encouraging workers to return to the office, perhaps to stop these mouse jigglers from flying under the radar. Labour released their manifesto last week ahead of the election on the 4th of July, including many promises regarding taxes for businesses and individuals. One promise they made was to cap corporation tax at the current rate of 25%, though many businesses will know this was only recently hiked up rather significantly from 19%, so another rise would be unexpected anyway. Another promise they have made is to revamp the business rates system, which currently taxes businesses with property. They aim to level the playing field between businesses with physical shops and those based online in an aim to revamp the high street. Lastly, they have promised to remove the age bands currently used to determine minimum wage, labelling them as discriminatory. This means that all working adults would be entitled to the same minimum wage. For the first time in nearly 3 years, inflation has fallen to the Bank of England's target rate of 2%, decreasing from 2.3% in April. This is primarily due to slower price rises to food and household goods, despite fuel prices increasing. This comes ahead of the Bank of England's interest rate decision, which will be announced later today. Will this spur them to reduce the 5.25% rate, the highest rate in 16 years? With the upcoming election, there is no doubt that the Conservatives will use the reduction to prove their economic policies are working, but is it enough to help ease financial pressures on families? The UK's main stock market has regained its position as Europe's most valuable market this week for the first time in 2 years. The total value of companies on the London Stock Exchange reached $3.18 trillion, surpassing Paris's valuation of $3.13 trillion. This shift is a significant milestone, marking the recovery of the UK market after years of underperformance in comparison to the French market slump amid their snap election. Our underperformance has been attributed to struggles from Brexit, recessions, and the fallout from Liz Truss's mini-budget back in autumn 2022, which we seem to just be coming back from. Sofa makers DFS have issued a profit warning due to shipping disruptions in the Red Sea, causing them to make detours around the Suez Canal as a result of the Houthi rebel attacks. This has increased their costs and caused delays worth between £12 and £14 million worth of deliveries. This has pushed the sales into their next financial year, which will ultimately impact this year's profits. Their actual profits will reduce from their forecasted £1.02 billion to just under £1 billion, which doesn't sound too bad to me. Thank you for joining us for this week's instalment of Tax Tidbits. Remember to show your support by giving this video a thumbs up and hitting the subscribe button to stay informed about all our future videos. And we'll see you next week.